In this video, we'll talk about what the board treasurer does for the community and about the 5 financial things every board member needs to understand about the co-op's financial statements. According to most co-op's bylaws, the treasurer is responsible for the timely and accurate collection and disbursement of all funds for the cooperative. Additionally, the treasurer is responsible for the timely preparation and maintenance of the financial records. This includes budget reviews, bank statements and returned checks, invoices, records, and any and all other financial reports as required by the bylaws, loan agreements, and contractual arrangements. This sounds like a big job, and sometimes it is. Usually, though, co-ops hire professional property management companies to handle the day-to-day details of paying bills, collecting rents, and preparing financial reports. In these cases, the treasurer's job is to make sure these tasks are done in a timely fashion and that co-op officers and members have the up-to-date financial information they need. The treasurer is responsible for the co-op's financial resources. This means making sure that all checks drawn on the co-op's accounts are signed by 2 authorized people and making sure bank accounts are reconciled monthly. They work with the secretary to send reconciled co-op accounts and monthly budget review reports to their community technical assistance provider, sometimes called CTAPs, and any lenders. The treasurer also oversees annual tasks that include drafting the budget proposal for board and member approval, making sure there is an annual audit of the books, making sure taxes are prepared and filed on time, filing the annual report with their state, confirming that the co-op is adequately insured, and working with the operations manager to draft a capital improvement plan for board and member approval. While the treasurer is responsible for your co-op's overall finances, all board members need to understand them. Here are 5 things every board member should know about the financial health of your co-op. The first thing is how much money is owed to the cooperative. This is the accounts receivable or rent receivable section of your financial statements. It's the total amount that residents are behind in their lot rent. Why would you need to know that? First, the lower the dollar amount is in the accounts receivable, the more revenue the co-op is taking in. Also, when the board knows homeowners are behind in their lot rent, the board or property manager can reach out to them to create a payment plan before they get too far behind. You can find the accounts receivable amount on your balance sheet under Assets. The second thing the board should know is how much money is in each of the cooperative's bank accounts. Board members need to know these amounts so they can stay on budget. Wouldn't you hate for the board to buy a lawnmower and then find out they didn't have enough money to pay for it? The cooperative has several bank accounts. The main one is its checking account, sometimes called the operating account. This is where all lot rent deposits go and the account from which bills are paid. Another is the capital reserve account. That's a savings account for big projects like a new sewer line, water pipes, paved road, or new mailboxes. Then there's a real estate tax escrow account. That's a savings account for the co-op's tax payments. The treasurer usually reads the balances of these accounts at board meetings. They're also listed on the balance sheet under Assets. The third thing for the board to be aware of is how much is being spent on capital expenses. Remember, we just mentioned that the capital reserve is a savings account for big projects. The board should look at its balance every month. If no big project is going on, this balance should increase because the co-op puts money away each month. When the balance decreases, the board should know what the money is being spent on. When a payment has been made from capital reserves, you'll see a transfer from the capital reserve account to the operating account on the cash flow statement. The fourth item to track is whether you have a budget deficit or surplus. Your co-op set its annual budget at your membership meeting. If its expenses are higher than income received at any point after that, the cooperative is at a deficit. If expenses are lower than income received, the cooperative has a surplus. Board members should watch this monthly and for the overall budget year. A co-op always wants a surplus, but some months might have more expenses than others, like for snow plowing in the winter. So, keeping an eye on your year-to-date bottom line will give you a good overall view of your financial health. You can do the math yourself every month or look at the income statement, which is also called the profit and loss statement. The last item the board needs to know is how much money is owed to vendors. Paying cooperative vendors on time is the same as residents paying their electric bill, Netflix, car payments, or rent on time. Vendors won't want to work with a co-op that doesn't pay its bills on time. The money owed to vendors appears as accounts payable and is also on the balance sheet under the liability section. All the financial information we've discussed can be compiled into a trending report. This very useful report allows the board to see the co-op's spending trends throughout the fiscal year. For instance, if the accounts receivable amount decreases every month or the capital reserves increase, that's good news. Watching these patterns can alert the board to nip any problems in the bud. These 5 things are great to know, and not just for the board. Any co-op member can look at the financial reports, except for the confidential information on the accounts receivable report, the one that shows who owes the co-op money. That just about wraps it up. We covered the roles and responsibilities of the treasurer, 3 very important financial statements, your income statement, balance sheet, and cash flow. And of course, we reviewed the importance of tracking trends and the 5 financial things all members should know.